discuss the Vedanta case, Tata Steel's numbers, and the metals pack. We have Rakesh Arora, founder of GoIndiaStocks.com, who joins us. Hi, Rakesh. Good morning. Good to see you in after a while. What's your view on Vedanta? You know, the stock has done very, very well. There is hope that, in fact, now the hearing is over. And the management had told us here on CNBC-TV18 as well, they are ready to give that corporate guarantee, which could help them out in seeing this demerger go through. Is there still value to be created if this demerger goes through from here on?
So, Nigel, Vedanta is having a good time with aluminum prices, silver prices all, hitting new highs. So at least there's earnings support coming in for the stock. Demerger per se doesn't really, create too much of value according to me, because when you look at research reports of analysts, the only holding company discount they were giving were for Hindustan Zinc. So most of the analysts do a 20% holding company discount for Hindustan Zinc. That is not getting demerged from Vedanta Limited. So there's hardly any holding company discount which is going away. But there could be some value creation for some segments which they might dispose of, which are not earning enough. So that is the only value creation which can happen in Vedanta from demerger. But looking at the past history, there could be other issues of intercorporate transfers and all those. So I don't think demerger itself would be a great value creator.
Okay, all right. You briefly spoke about aluminium. So let's focus on the three players that we have. Hindalco, that Novelis's capex, has put the stock on the back burner. Stock has seen a good correction because now, that capex is much higher. Q3 will be a washout for Novelis because of the fire as well. What is your view on Hindalco? And between Hindalco, Nalco, which has suddenly come back into play, but we have seen it in the past, Rakesh. Sometimes it gives very, very good numbers. When the cycle turns, it will be back down to less than half. And Vedanta, which is again a tricky one. So between the three, what's the pecking order?
So, if one has to play the commodity, then a pure play is much better as compared to the rest. So Nalco has, is one of the purest play. So if you are very bullish on aluminum, I think that would be the way to go. If you're trying to hedge it, probably Vedanta, because it has a few other commodities, so it kind of balances things out, and there's euphoria about the demerger. Hindalco clearly has been a little bit of underperformer, and there's hardly any catalyst that we can think of which can move it out of that range soon enough. So that's the pecking order.
Okay, all right. And let's shift focus then to the ferrous pack. Tata Steel came out with its set of numbers. The India business actually did quite well. Netherlands continues to do well, while the UK on expected lines is still a loss. But I think the street is hoping that maybe by the end of this year, that as well turns profitable. Your view on Tata Steel's numbers first?
So Tata Steel numbers were a little bit of positive surprise because their realizations and EBITDA per ton in India didn't dip as much as some of the peers like JSW Steel. So, and when I look at the consensus estimates, they are not really too way away from what Tata Steel has reported in the first half. Meaning, like if you look at JSW, they did 15 rupees EPS in the first half, and estimates are at 44 rupees. So there is a little bit of earnings cut, which would still come in JSW, but Tata Steel seems a little bit okay. But having said that, steel prices in India haven't shown any signs of picking up at the moment. And even Chinese steel prices have dropped by around $18-20 in last month or so. So there's a lot of hope. Steel stocks have been a great performer in the last 12 months. I think now we are reaching a territory where more neutral. There will be support coming in if steel prices recover in the busy season. But valuations are already too high, and there's nothing much to play out there.
So you won't be bullish on any of them right now? JSPL, JSW Steel, Tata Steel, SAIL?
They might be a little bit supported at these levels, but mostly in a trading range. I don't think there's a bull run happening in those stocks.
Okay, all right. And finally, my colleague Yash here broken the story that there could be some value unlocking on Bhushan Power and Steel. The suggestion is that probably there could be some part of the promoter stake, which is around 17%, gets sold, and maybe JFE comes into Bhushan Power and Steel. And the listed entity as well, JSW Steel, that has roughly 83%, they as well pay some stake. What would you value Bhushan Power and Steel as an asset at? And do you think this will be a good amount of value creation?
So, I mean, it's too small for JSW now because JSW is such a big company, and this is a small asset and a small stake sale. It doesn't really move things in terms of valuation. Maybe JSW wants to establish, that they haven't bought this at ridiculously cheap price. So I think that's the only motive that I can think of why they would want to give away a minority stake over here to, some external party. Otherwise, there's hardly any value unlocking.
Value it at, what would you value the asset? They bought it for under 20,000 crores. What would you value the asset at now?
So, Prashant, very difficult to say because see, JFE is their interested party for last more than a decade now. So we don't know what it will be a mutual deal. It's not driven by fundamentals.
Okay, all right. We'll have to keep an eye on that. Rakesh, we have been talking about JFE probably increasing stake from your Macquarie days, I think so, from those analyst calls at ITC and those Saturday evening meetings as well. So let's see what they do with this asset. They managed to turn it around. Now it does close around 3,000 crores of EBITDA per annum. So interesting deal, but how does it play out is something we'll track. Appreciate you joining in, Rakesh. Wishing you a good day ahead and catch up soon.